Cameron says, "Hi, Austin and Robert. I'm in a sticky situation deciding whether to keep my residential property or not. Before listening to the show, I fell for the trap that real estate is always a good purchase, and I purchased a single family home for myself and my son. It was at the peak of the housing market in July of 2022. I bought it for $310,000, but right now it appraises for below $260,000. I'm in San Marcos, Texas, and I owe $291,000 on my mortgage at a 4.9% interest rate. After my son's mother moved about 45 minutes away, I had to relocate closer to his school, so I'm now renting that house out. The mortgage that I'm paying on that house is $2,450, but the rent that my tenant is paying me is only $1,600. I'm 30 years old. I've got $80,000 in index funds in traditional brokerages, $22,000 in my Roth IRA invested in index funds as well, $250,000 in Bitcoin that has grown substantially over the last several years, and $10,000 or so in large cap single stocks, a few thousand in REITs, some art on Masterworks, as well as about $100,000 of cash in a high yield cash account for emergencies and disposable for future investments. I make roughly $120,000 a year, give or take, based on my commissions. So here's the question. Would it be smart for me to hold on to this house for the next few years or take the loss now to get rid of it and clean my hands?" Robert, this is a real estate question. I feel like it's right down your alley. I'll let you kick this one off as well.
It's definitely a sticky situation, but I look at it this way. If you sold it right now, it's not really a massive loss. You can fully handle the loss. You have plenty of cash to do it. But in my opinion, I wouldn't touch it because I don't know that part of Texas, San Marcos, but I would say that you at least have capital appreciation and the potential to make this money back if the housing market starts to go back up in San Marcos. So I would keep it. I know it's a $800 loss a month for you out of your cash flow, but I think the numbers make sense to give yourself that chance to be able to get the money back and have a positive outcome from this property rather than just selling it and cutting your losses. The only way I think it makes to sell and cut your losses right now is if you weren't in a good financial situation and the $900 or $800 a month was make it or break it for you. But otherwise, I'd keep it because there's a strong chance that capital appreciation in that neighborhood goes back up. The house value goes back up over the next 2 or 3 years. And so that's why, in my opinion, I would keep it.
That's a really good perspective. So I'm running some numbers here. And if he sold the house at about this $260,000 range, he'll take home to himself after commissions and probably some fees about $240,000 to $245,000. But he'll still owe $291,000 on the mortgage, which means he'll still have to pay, let's call it $50,000-ish back to get out of this situation. So that's that $50,000 loss that he's alluding to. Now you're saying that he should just continue to hold on to this house, eat the $850 of negative cash flow every month, which after about 4 years or so will mean that same $50,000 loss if he just got out of it now. So you're assuming that in the next 4 years that the value of the home will appreciate so much that he'll be back in the money.
Well, I look at it this way. If he originally bought it for $300,000, and let's say with a $300,000 home, the original price, and let's say that the capital appreciation is average, so it's 4% a year. So that would be $12,000 a year in capital appreciation, we assume at a 3-4% rate. So I look at it this way. I would rather have the asset still with the opportunity to recoup my money than sell the asset, eat the loss, because I know where you're going with this, and it does make sense, is that he could take that $800-900 a month and invest it, and where would the better outcome be? We don't know that, but that's just my take of what I would do because I always like to give myself a chance to be able to win in a situation that is a bad one. And in this instance, that's why my opinion stands that I would keep the property because you never know with that area.
So I know, Zaid, you're very familiar with this area because you live in Houston and you used to live close to this area. What's your perspective?
Yeah, so I live in Houston right now. I lived in Austin, which is pretty close to San Marcos. The entire central Texas area is kind of going through a repricing right now when it comes to housing. It was really popular during the pandemic. And now these days, prices have come down significantly. So San Marcos is probably about an hour and 10 away from Austin. I don't know if the area is going to bounce back to the same level that it did during the housing boom that we had during the pandemic. I feel like the vibes are a little bit down when it comes to Central Texas compared to what it was, 3-4 years ago. But you have the opportunity of recouping some of the loss. I think the other question is like, how much of a pain is it to manage the rentals, right? So he's 45 minutes away. Does he have a rental property, a company who handles all the maintenance and stuff? Does he do it himself? How much of that is taken away from his job, his family, things like that? So I think that's the other question is, if it's not too much of a pain, then I guess you can eat the loss and hope for an appreciation. But if you add in the cost of managing the property and like the mental costs and the headaches, that could change the equation a bit.
I will also say that this guy's in a wonderful situation besides the home, right? He's got $100K of cash waiting for, disaster to strike. Well, guess what? This is the disaster, right? $50K could go to this. He has $250,000 of Bitcoin. One, I would encourage you to take some profits when you're ready and then reallocate that to more traditional investments like what Robert and I are doing here. But it's like you've got these levers that you can pull that make this not so much a disaster in the sense that, oh my God, my mortgage, I'm going to have all this debt. I got to take on a personal loan, like all that. Now it's just an inconvenience, right? It's the tuition you pay for learning if you ended up wanting to get out of this. Yeah, I'm kind of torn, right? Because on one side of the equation, to Robert's point, there is very much a world where it could bounce back. But on the other side of the equation, I think about probably myself here in Nashville, right? I paid about $400 for my home. I think its estimates right now is like close to like $380 or so. I plan to live here for a while, and then I also plan to rent it out. So it's like, it doesn't really make sense for me to like feel weird about a $20,000 capital depreciation since when I bought it like 2 years ago. But I think, it's very neighborhood specific. It's very specific to someone's situation. And your situation is that your child is 45 minutes away. So you now are renting a house or an apartment closer to where your child is at school. And you're now having to like play, this remote landlord job, which to Zaid's point, I'm sure could be pretty intimidating. I agree. Like it's a toss up. If you are unhappy with the situation, you have the money set aside, saved, and ready to go to get yourself out of it. And congrats, like that's just paying tuition to the markets and learning and paying what is called a stupid tax, right? It happens. We've all paid all those stupid taxes in the past. But to Robert's point, you also have the situation where you also have enough set aside to eat this cost for the next couple of years, allowing you the flexibility and opportunity to have it appreciate over time. So I would really just do some reflecting and know, like at the end of the day, it's no longer a math equation. It's a brain calorie equation. It's an equation to do with your relationships. It's an equation to do with your time spent away from your family. Like I think that's how I would approach it in this situation.
And one last caveat and hack that I use all the time, and I just use it to my advantage big time in a commercial property purchase. Do your research. You don't know. You could sell this property, eat the loss, and miss a news article in your local development newspaper or website or whatever your local administration of some new factory. Micron decides to spend $100 million building a factory there, or FedEx builds a new hub. And then all of a sudden rental rates in the area go up 40% in the course of a 2-year period. And you just sold because you didn't know that was happening. So just always do your research in this situation, because the people that understand what's happening and forecast, like Austin and I always talk about, are the ones that win. So that's why I always want to give myself a chance to win in these situations.
Best of luck to you, Cameron, and we appreciate you asking your question here on the podcast.